Welcome back to Alpha Recap. It's Tyler here. Thanks for joining us after the close. Today we're breaking down a cross-market reset where data centers, AI, and commodities really set the tone. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks, Tyler. Good to be back. Lots to unpack from the trading day. It was one of those split markets where infrastructure and commodity-linked names finished strong, while some areas of tech and healthcare paused for breath.
Let's start high level. Markets closed with a neutral tone, right? Energy, utilities, and materials outpaced the rest, but tech and finance were more mixed.
Exactly. To put it simply, you had traditional cyclicals and infrastructure-linked sectors showing upward momentum, and pockets of tech strength that were offset by regulatory and operational headlines. So the day ended with momentum in certain themes, but not a broad-based rally.
Okay, let's dig into the winners. Energy led the way. What drove that?
Two things, really. First, oil flows and stronger crude commentary helped lift traditional energy. Second, renewables, contract wins, and project awards gave another leg of support. That's important because it ties long-duration, contracted cash flows to project developers and power producers. So energy finished the day up on both commodity strength and renewable bookings.
And utilities had a similar tailwind, but from data centers, correct?
Right. Utilities benefited from hyperscale data center demand. For example, Southern Company reported material data center sales growth, and we saw a massive move in interconnection interest. PJM drew 811 projects, totaling roughly 220 gigawatts. That kind of pipeline converts into transmission upgrades, storage, and renewables signing, so utilities finished the day positively influenced by non-traditional load growth.
Wow, 811 projects and about 220 gigawatts. That's a big number.
Yeah, that tracks. Big move.
Materials and mining also outperformed. What was happening there?
Materials saw momentum from critical minerals project progress and supply chain packs. Governments and corporates are racing to lock down rare earths and battery metals. So you had project announcements, MOUs with big traders, and price attention on things like dysprosium, all of which pushed that sector higher on the day.
Okay, now for the flip side. Tech was mixed. Walk me through the push and pull there.
Tech showed pockets of strength. AI chip order flow, data center land buys, and agent-driven trading pilots were notable positives. But there were operational and regulatory checks. A Linux root exploit in open-source code raised security concerns, and supply chain whispers around major device makers created caution. So tech finished mixed as growth narratives clashed with execution and security risks.
Right, so AI is a big growth story, but comes with concentration and delivery risks.
Exactly. AI increases the total addressable market for certain software, cloud, and semiconductor companies, but it also concentrates risk. If one piece of the supply chain or a security layer breaks, it can create outsized downside for high-valuation names.
Short reaction. Let's pivot to crypto for a second. Bitcoin rallied. How big was that move?
Bitcoin rallied back towards $77,000 to $78,000, and crypto betting markets passed a combined $150 billion. So on headline depth, you saw stronger engagement. But there were also institutional caveats. The Ethereum Foundation treasury sales and token-specific resistance added selling pressure in places.
So more market depth, but still episodic risk.
Yep, momentum was there, but token-specific flows and occasional large sales kept volatility high.
Quick reaction.
Right.
We should talk about policy headlines. There were a few items: cannabis rulings, trade talk on autos, and regulation moving in other spots. How did policy shape the tape?
Policy created asymmetric winners and losers. On cannabis, a DEA clarification around HHC and a Texas court decision letting smokable hemp stay on shelves eased enforcement tail risk in pockets. But federal hemp rules, due in November, remained a pending catalyst. On trade, a possible 25% tariff on European autos surfaced as a real near-term headwind for industrials and auto supply chains. And across finance and healthcare, CFPB tweaks and an FDA panel setback weighed on sentiment in those sectors.
So policy calendars matter a lot here.
Absolutely. Regulatory timing. Hemp rulemaking in November, potential tariff implementation, FDA panels. can quickly change market leadership. Analysts were calling out that calendar risk as a key thing to monitor.
Let's pause for a moment and hit the day's most significant corporate headlines that listeners will remember.
Sure, Southern Company flagged meaningful data center sales growth. U.S. Steel announced about a $1.9 billion direct reduced iron project that's capital-intensive and ties into decarbonization. Caterpillar highlighted capacity commitments tied to manufacturing demand. Amazon continued to show cloud growth and grocery-scale improvements. And on the crypto infrastructure front, some companies reported stronger data center revenue, connecting miners and infrastructure plays to the broader real asset story.
Got it. Now, on healthcare, you mentioned mixed headlines and a setback earlier. Any color there?
Healthcare finished the day under pressure in parts. You had innovation headlines, but an FDA panel setback, a clinical trial stumble, and a recall in the news cycle. That creates binary outcomes. Some names could rally on good data, others could sell off hard on bad outcomes. It was a reminder of how headline-driven healthcare can be.
Yeah, that's a sector where single events can move stocks dramatically.
Exactly. Volatility there tends to be higher because outcomes are binary.
Let's go over the cross-sector themes to tie things together. First, data centers and electrification-connected utilities, real estate and energy.
That was one of the clearest threads. Data center demand fed utilities and real estate. Big land buys and leasing activity show up as power demand for utilities and leasing for real estate owners. And because data centers require a lot of power, that accelerated renewables and storage PPA activity. The PJMQ really underlined the speed of that build-out.
Second theme, AI permeation across sectors, but with concentration and execution risks.
Yes, AI showed up across tech, communications, and finance. Agent-driven trading pilots, AI chip orders, edge hardware. But open-source security issues and supply chain constraints meant higher execution risk for companies leaning heavily on AI investments.
Third theme, commodities, critical minerals, and geopolitics.
Right. The day highlighted both traditional commodity cycles and the structural shift to metals and minerals for electrification. Supply-side moves in critical minerals, MOUs with major traders, and price action in rare earths all reinforce that materials remains a pivot for the broader transition to electrified systems.
Short reaction.
Yeah, absolutely.
Now, some practical takeaways for listeners who want to turn today's themes into a monitoring plan. Informational only, no advice.
First, prioritize balance sheet resilience and cash flow visibility, especially in multi-year, capital-intensive projects like renewables, materials, and real estate. Second, watch data center pipelines and PPA curves. Land buys and interconnection queues give you an early read on power demand. Third, monitor critical minerals supply and concentration risk. MOUs and offtake deals matter. Fourth, treat AI adoption as a two-edged sword. It expands opportunity, but raises execution and regulatory risk. Fifth, for crypto, pay attention to technical flows and foundation or treasury sales. They can cause abrupt reversals. And finally, keep a regulatory calendar handy for hemp rulemaking, potential tariffs, and FDA or CFPB dates.
Perfect. Quick reactions from listeners. A few short phrases.
Honestly, I was a bit surprised by this one.
Right. Hold on. Say that again.
I mean, when you step back and look at this, the speed of data center demand surprised some people.
It's true. The scale caught a lot of folks off guard.
And to add to that, which connects to materials and power, when hyperscale demand moves, it ripples through multiple sectors pretty quickly.
Before we wrap, let's run a quick risk checklist. What would derail today's narrative?
Policy shocks, like an implemented 25% tariff on European autos, would be a major headwind. Macro surprises, an upside inflation print, or a weak jobs print that forces Fed repricing, could roil risk appetite. Tech operational shocks, such as a supply chain breakdown for key semiconductors or a systemic security exploit, would hit tech hard. Clinical or regulatory failures in healthcare could produce cluster selling in biotech. And crypto liquidity events, coordinated large sales from foundations or exchanges, could produce abrupt market stress.
Great checklist. Final quick takeaways for listeners in one sentence each.
Energy and utilities benefited from both traditional commodity strength and data center-driven power demand. Materials were boosted by critical minerals progress. Tech showed AI-led growth, but with execution and security checks. And policy calendars could flip leadership quickly.
And one more. Focus on companies with clear cash flows and strong balance sheets. And treat AI and crypto as growth allocations that need active monitoring.
Exactly. And remember, this is informational only. Analysts note that scenario planning and balance sheet analysis were the smarter way to navigate this kind of mixed leadership environment.
That's our recap. If you want to dig deeper into any of these themes or specific headlines, head to stockalpha.ai and use our Q&A feature to ask us directly. We'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be watching the regulatory calendars, the data center pipelines, and the next batch of AI hardware orders. And we'll bring you updates after the next close. See you next time.
Thanks, everyone. That's Alpha Recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Bye for now.